all, welcome and thank you for joining us today. My name is Elizabeth Sargent and I am joined today with Christina Schmidt and Jennifer Bandi from the HR department. Our presentation today centers around the health savings account benefit offering. Today we will discuss what is an HSA and how it is both beneficial to an employee as well as an organization. So let's jump right in. These are some key acronyms used throughout this presentation, so I just wanted to get you guys familiar with them at the very beginning. Our HSA, our health savings account, health savings plan. We have the HCHP, that's our high deductible health plan. OOP will refer to our out-of-pocket expenses. And then lastly, our FSA, which is a flexible spending account. So what is a health savings account? A health savings account is a tax advantage savings account designed for individuals with high deductible health plans. So this helps individuals set aside money for upcoming medical expenses. All contributions and withdrawals for qualified medical expenses on the account are all tax-free. And we have linked a PDF for you to view if you'd like more information regarding what is the HSA if you are not familiar. So who's eligible, right? Employees must be enrolled in a high deductible health plan, that's our ADHP, must have a minimum deductible of $1,500 for self-only coverage and $3,000 for family coverage. So now these numbers will increase for 2024. Those increases we'll discuss later on in this presentation. All right, back to it. HCHP must have a maximum out-of-pocket expense of $8,050 for self-only. That number doubles for family coverage to $16,100. All right, what are the advantages? So there's no use it or lose it. If balances are not subject to the use it or lose it rule, they can roll over year after year. Employer contributions. So this is huge. The company can also contribute to the employee's HSA account, usually a different amount for self only in comparison to family coverage HSAs. Triple tax advantages. Contributions, earnings, and withdrawals are tax-free. That is huge. Convenience. It's a convenient way to save for future out-of-pocket medical expenses. It's portable. The account belongs to the employee, so they can take it with them if they leave one organization. It is an opportunity to invest. Employees can invest their contributions in a similar fashion to a 401k. Employees can choose their own bank. So they have the flexibility to select an HSA bank of their choice. And most employees find the flexibility and investment opportunities of Fidelity's HSA bank very attractive. Other common ones are Lively, Health Equity, and Bank of America. Okay, can be paired with a limited purpose FSA. While you cannot be enrolled in a medical FSA and an HSA at the same time, employees can enroll in what's called a limited purpose FSA. And what that is it covers your dental and vision expenses. And so by doing this, by pairing this limited purpose FSA and an HSA, you're further reducing that taxable income, as well as saving for future medical costs and expenses. So moving forward, the 2023 and 2024 HSA maximums. So pay special attention to that HSA catch-up number. The catch-up provision is for anyone 55 years of age or older. So that's that amount right there. And then the key issue for plans renewing in 2024 is that they will have to ensure they are meeting the new minimum deductible and maximum out of pocket. So you'll see those guidelines on this slide right here. Moving on, and how does this work? Okay. So an employee has the option of choosing any HSA bank that they desire. Things to consider when choosing a bank: obviously minimal investment transaction fee. So how much is this going to cost me? Investment options. Do they offer a debit card? What other services do they provide? The employee can elect how much they want to contribute, taking into consideration, obviously, the maximums allowed, the employer contributions, and then that catch up for those that are over the age of 55. Contributions are withheld on a pre-tax basis from the employee's paycheck. They have the flexibility to change their contribution amounts at any time during the year. The employer and employee contributions are withheld from the paycheck and automatically deposited into the employee's HSA bank of their choice. Now, employees can let the money sit in the account, they can request a reimbursement, and they can, of course, use their HSA debit card at point of sale. They can even go to an ATM and withdraw funds. So this is a tax savings example. So I'm going to leave this up just for a little bit so you can just kind of take a look at it. This is assuming the employer contributes $1,000 towards an employee only and $2,000 for family, as well as a 30% tax income bracket. So those were the assumptions that we based off for this example. All right, qualified medical expenses. So we've got health, dental, vision. Anything that would fall under the deductible will be a qualified medical expense. So you can go through and look under health, dental, and vision, the things that are qualified expenses. And then you can always refer to the IRS publication 502, which has a more comprehensive list of those qualified medical expenses. All right, so penalties to an employee for a non-qualified distribution. So this is super important. The HSA bank will not require the employee to submit receipts to substantiate the reimbursement. Now, FSAs do require this, but that's a separate subject. However, should the employee ever get audited by the IRS, they must have enough qualified receipts to match the amount of funds withdrawn from the HSA. If they do not, they can incur that 20% penalty if they are under 65. In addition, the distribution, that amount, that money that was withdrawn is taxable. So they would have to pay the taxes on that amount. There is no penalty to the employer. And then 65 or over, there is no penalty. They just take that withdrawn amount and then it is taxable. Typical reimbursement methods. Pay providers directly with the HSA debit card. You can submit a withdrawal request form. And then with some banks, you're able to receive a debit card and you can withdraw funds from an ATM directly. Just make sure you keep those receipts in case you are audited. Okay, benefits to the company. So this is huge too on an organizational and development scale. Increased employee satisfaction. That's huge. This helps create an attractive benefits package. Contributions made by the employer are exempt from payroll taxes, so that really helps out. Employers don't pay federal payroll taxes, which is commonly referred to as FICA, on employees' pre-tax payroll deductions to fund their HSAs. So that equates to about a 7.65% savings to an organization. And then, of course, helps employees to be more cost conscious, ultimately reducing claims. And that's beneficial all around, employees to the organization. Okay, now challenges of offering an HSA. The company must be willing to put time and effort into educating new users on the HSA. And education has to be continual. As limits change, deductibles change. So it will take more of our time to administer the program, to properly roll it out. We need to make sure that our payroll provider can easily deposit the funds into the HSA banks. We'll need to monitor and ensure that the employer and the employee contributions don't exceed the maximum allowances for that year. Must maintain that ADHP and compliance. So staying in compliance is almost its whole department within benefits. So do we want to add this benefit? Your HR department, get together, this is where you're at. Say yes. If so, we need to determine how much the company wants to contribute. What is that dollar amount, that percentage amount? You need to ensure that your payroll provider can support adding this new benefit. Can they deposit the funds into different HSA banks? And, if so, which ones? If not, which ones can they not? Will it track when someone is hitting the maximum contribution limits for the year? How quickly can we implement the benefit? We have a handout for you guys that you can take with you. It's a great education piece. And then once you educate your employees, you update the payroll system, you upload all of that new HSA banking information, then you can start contributions. And then, of course, your education is ongoing for this. And that is all we have for today. So if you have any questions, please submit them to us, and myself or a member of our team will connect with you. And thank you guys for your attention today.